There's the NASDAQ, up nearly 1.5%. Brings us to our talk of the tape, whether stocks are on the road to new record highs. As someone at Goldman Sachs today said, they are. Let's ask Adam Parker. He's the founder of Trivariate Research, a CNBC contributor as well. AP, it's good to have you here. Welcome.
How are you? Looking good. I'm looking good out there.
How am I? How beautiful is it here? I'm good. Thank you.
I love being followed by Colin Jost. You know, just another person who's better looking and funnier than me. Thanks for that.
Well, here we are.
You know.
You're neutral U.S. equities. Why?
We just did our second half outlook, and as you know, we were bullish on the first half, and kind of. I think now it's just harder for us to get there on the valuation. So what we wrote is we see the same probability of 10% upside as 10% downside. And to get to, say, 5,000 on the S&P, which is about 10% up where we are today, it looks to me like you have to pay over 20 times the 24 earnings at the end of this year. So it's hard for us to get there on the valuation front. I don't think things are falling apart. I mean, the early signs from earnings season, I imagine you're going to get into that, look pretty good. And so I just think things slowly erode, don't implode, but I just can't get there on the multiple side.
But why is the probability the same, do you think, of 10% up or 10% down? In some respects, couldn't you make the argument, as I said earlier on halftime, that you've gone from a glass half empty market to what I think you can make a compelling case is a glass half full market at this point? If you think the Fed's done, if you think inflation's coming down, if you think earnings are holding up, the consumer's going to hold up, and the economy's not going to fall off a cliff, why are the probabilities equal?
I just think the challenge is figuring out what's going to happen in the second half of 24, like a year from now. So if we're being very simplistic, the stock market sold off hard at Q2 and Q3 last year because earnings decelerated 3 quarters later. The stock market ripped Q4, Q1, and into Q2 of this year because earnings accelerated from the lows. I think the current estimates are sort of flattish, meaning they don't accelerate or decelerate Q2, Q3, Q4 next year. So until I have more clarity on the rate of change of earnings next year, it's just a little harder for me to see a clear path for the market. I think what you said is right in terms of the probability the bear case is lower for earnings. The severity of the bear case, if one forms, is lower. But I think what your difference now is you were playing like 15 times in October of last year, and you're paying 20, 21 times now.
When you hear Mary Daly, obviously of the San Francisco Fed on our network today, suggests that it's too early to say that we can declare victory on inflation and talk about the probability of 2 more hikes before they're all said and done, do you say, here's a Fed that appears that it was, way too late in the beginning and it's going to be way too hard at the end? Is that a fair assessment? Do you think the Fed should just declare victory at this point and do nothing?
I think there's thousands of people who look at everything that everyone on the Fed says and try to create a path. I think it's a hard way to make a living. What I can do is measure Fed fund futures or the perception about rates and compare them to price-to-earnings ratios for the market. The observation I have is that was a very strong relationship for a long time, right? Hawkishness was bad for multiples. And very recently, it's interesting. The perception about dovishness has caused multiple expansion, but any hawkish commentary has not caused multiple contraction. So I think people are just, no matter what they say on the Fed, just think we're very close to the end of the cycle. Whether it's one more hike or not, they don't care. And as long as the earnings aren't collapsing, that's the current mindset. I think that'll change, Scott, over the second half of this year. But currently, no hawkish commentary is causing a multiple contraction.